Hey guys, this is Will Roundtree, your FICO certified credit specialist, author of 2 books, Credit is King, as well as Full-Time CEO, The Shit They Don't Tell You. But more importantly, I want to take you on this journey about financial literacy, the importance of credit, how to understand credit, and how to get to that money. Let's go. Hey guys, Will Roundtree here. Look, I get a ton of questions, people asking me, look, I have great credit, what can I do with it? Or, I'm striving to get good credit and I want to know what I can do with it. And so you may have heard me use the term, or my partner Paul Thornton, leverage everything. And so when we talk about leverage everything, we're not talking about just frivolously going out there and, buying up everything just for the sake of, because you can when you have great credit. But we're really showing you, and when we say leverage everything, we're talking from a strategy standpoint. And I often say we don't have a money problem, we have a strategy problem. Because I know a lot of people who have been able to position themselves to, make a very good living, create a very good financial, safety net or whatever they want to call it, all by leveraging their credit. And that's where the terminology leverage everything comes from. So one of the many, many strategies that we've done, that we've tried, tested, and it's been proven, is showing people how to leverage their credit to start that rental car business. And, the most common and the most popular is by using Turo. Now, you may ask yourself, well, how can I just start a rental car business? What's the benefits? Can't someone just go down the street to their local car rental company? And all of those things would have been true maybe about 6 months ago. See, for those who may not have heard, Hertz recently filed bankruptcy. And you may ask yourself, what does that mean? Well, because Hertz filed bankruptcy, they own anywhere between 5 to 7 of the major car rental places. Now, with that being said, what ended up happening is that's over 1 million vehicles that they are now taking and pulling from their inventory. Now, you still may be asking yourself, well, Will, what does this mean for me? Well, what that means, have you tried to catch an Uber recently? Some of the average wait times, especially out here in my local market, are anywhere between 15 to as much as 30 minutes to take a 10-minute ride. And so that's a huge gap in the marketplace. And as they often say, the best way to become wealthy is to fill a gaping hole in the marketplace, and you want to fill it better than anyone else. And so one of the gaping holes that's currently happening right now is that there's a lack of inventory of rental cars, even private. Think about it like this. Let's say you live in an area where, tourism is fairly popular. Well, if there is a shortage of rental cars, they have to rent from somewhere. Or you may have some family coming in town and they can't rent a vehicle. Or, like I mentioned, a lot of the Uber and Lyft drivers, a lot of them rent their vehicles from the major car rental places. But if there is a shortage of vehicles for them to rent from, obviously they have to rent from somewhere. So there's multiple platforms that you can put your vehicles on. Now you're saying, put my vehicles on, we'll only have one vehicle. Well, that's why I'm going to show you how to leverage your credit to be able to get vehicles and start your own rental business. Now, the beautiful part about starting your own rental business, first of all, you own it. And when you own it, that means you're the boss. You're becoming that full-time CEO. You're becoming that entrepreneur. And you can do all of this really from the comforts of your living room. Or if you work, in corporate America, you can do this while you're at your desk or whatever, you do. If you're in the field or whatever, all from your cell phone. And so I'm going to give you just some of the basics without really going into some of the high level things. But I want to just show you how ridiculously simple this is, And so the beautiful part about this is that, again, I'm going to show you how to leverage your credit. That means is that I'm going to show you the strategies on how to be able to get the vehicles pretty much with no money out of your pocket. That's right, no money out of your pocket. And you're asking yourself, well, Will, what kind of vehicle can I get with no money out of pocket? Really, pretty much whatever. See, this is the thing. Whenever you go to a dealership, obviously, you can purchase a vehicle. If you had to guess, what's the minimum credit score needed to purchase a vehicle? It's actually about a 500. Now, a 500 credit score may not get you much. And you're going to have about a 29% interest rate. Now, obviously, mathematically, this would not be the best scenario for you to go and leverage your credit to go and purchase a vehicle and go out there and try to start a luxury car rental line or even just start a rental business, period. And so this is why having good credit is important, of at least a 680, to a 700 credit score or 700 plus. You want a minimum of 680 because this is what starts to happen. When you have a 680, which is actually fair, you want to get closer to the 700 before you get to good. I'm going to show you what you can do to be able to get the vehicle with no money down. That's right, no money down. See, this is the thing, guys. When you have great credit, and I like to use the term great because even if you're at good, the goal is to get to great. And a lot of times it's just about time and being patient and all of those things. But see, when you have great credit, you can go to your own banking institution, get pre-qualified, go to the dealership of your choice, and then you pick the vehicle that you want to purchase. This is what this looks like. See, when you go to a dealership, here's the dealership. Okay, I know the roof is crooked, but just follow me. All right, so you go to the dealership, you see the cars. I really am not a drawer. All right, whatever type of car you want this to be. You go to the dealership. If you have decent credit, fair credit, good credit, what they're going to do, and this is something that they don't tell you, the average dealership can run your credit anywhere between 7 to 15 times per application. 7 to 15 times per application. So the lower your credit score, the more times they're going to run your credit. So if you have a below fair credit score and you go to 3 dealerships, that is now 45 times that they ran your credit, which is going to cause hard inquiries. And as you probably learned from some of my previous videos, a hard inquiry, especially when they become excessive, can drop your credit score. But what I want to show you is that when you go to this dealership with good credit, again, 700 plus, not only can you minimize the time that they run your credit, but you're also going to get a lower interest rate. Now, let me show you the strategy that I like to show individuals who I work with personally to where not only is going to save them from getting the number of credit applications, because the main reason the car dealerships run your credit, multiple times, one is they're shopping your loan. See, when they're shopping your loan, or as the term used, shotgunning your application, they're looking for a bank who's going to give the best rate, because typically this is what happens. Let's say you find a vehicle for $20,000. Okay. The dealership is shopping your loan or your application, but the bank is only willing to finance $16,000. You have to come up with the difference, which is how much? $4,000. This is typically where the down payment comes in at, because the bank will not finance the entire vehicle amount, usually based upon the risk. And that risk is assessed based upon your credit score. And typically when you have a down payment of that amount, again, you're going to have a higher APR, annual percentage rate, or most commonly referred to as an interest rate. The interest rate is literally what makes the payment. True story. In 2008, I needed a vehicle. I had just recently had 2 vehicles repossessed prior to. I needed a vehicle, and I bought a vehicle for $8,000. I think it was like a Chevy Envoy or something like that. After all of the interest and everything, it was a 3-year loan. My payment, the total I would have had finance came out to about $14,000. Again, keep in mind, this was a $8,000 vehicle. I had a 36-month loan. My payment was $400+ per month. Hopefully you guys are following this. $8,000 vehicle, my payment was $400. Because the other thing is, when you go to the dealership with challenge credit, not only are they going to give you a higher interest rate, but they're going to shorten the time you have to pay them back. And when they compress the amount of time you have to pay the vehicle back, typically that is what drives the payment up. So a lot of times I know people are scared to get into newer vehicles or more reliable vehicles because they're scared of the payment. Well, how do you avoid that? You improve your credit score. Now, and this could be a whole nother strategy session. But in this case, if I would have known then what I know now, if I would have had to settle for this, I would have just improved my credit, went back to refinance, and then get a lower payment. But, we'll talk about that on another video. Right now, I'm going to show you how to start your own car rental business. Okay, so you have great credit. You go to the dealership, you see the vehicle you like. You're saying, you know what? I like this vehicle right here. You get you always ask, what is the out the door cost of that vehicle? Out the door. Meaning the purchase of the vehicle, car, SUV, you want taxes, title, all of those things. So they're going to give you the out the door cost of that vehicle. Now, another thing is because I'm going to show you how to get this vehicle with no money down. A lot of times when you're not using the dealership's financing, there's a little bit of negotiation or wiggle room on the price because it's almost as if you're coming in with cash, not cash from your pocket, but cash from your personal bank. This is what this looks like. So you go to your bank. Typically, I like credit unions. The reason I like credit unions is because, one, they are smaller banks and they have to figure out a way to be competitive. So the best way for them to be competitive is they're going to be competitive with their rates. So they may say for vehicles in a certain range, meaning, the age of the vehicle, they can go anywhere from 0% up into 3.9 or 4.2. And a lot of times it depends on the loan to value ratio. I mean, they have their own equations, but you can actually get pre-qualified before you even start shopping. So if you have a ballpark figure of what you want to spend, so let's say the vehicle is about 35 grand. You contact your bank, your credit union, and say, hey, I want to get pre-qualified for a vehicle for $35,000. And they're going to pre-qualify you and they'll give you your terms. Okay. So now, once they come back and approve you, you have a check waiting for you for $35,000 to spend. Literally. Okay. All you have to do now is go and pick the vehicle. Now, the check or that approval usually is good for up to 60 days, depending on the bank, up to 60 days. So now, you go to the dealership, you find the vehicle you want, you found the vehicle, and the out the door cost, let's just say, came out to $33,000. Okay? No, you cannot pocket the other two. Okay? The bank is only going to cut the check for the 33. So, I just want to, because I've had a couple people ask, well, can I just get half of that and get the rest? No, they're going to give you the amount of the check for whatever the vehicle is. But typically what I tell people who I work with is you always want to ask for more than what you think you're going to get approved for. Just because you may see a vehicle that has more options than the other one and you're about $3,000 short. So you always want to have that buffer. Not saying you should go and spend it, but I'm just saying you never know. You may want to have gap insurance. Well, you want to make sure you have enough to cover that gap insurance. And for those who don't know what gap means or gap insurance, that's the gap between what the vehicle is worth based upon what the insurance is willing to pay out in the event of a total loss. So if you bought a vehicle for 35, but the vehicle is only worth 30, you have to come up with the other 5,000. But if you have gap, it's going to cover that in between. And a lot of dealerships will allow you to finance that, which is why if you know the vehicle is going to be about 30 grand, always ask for about $5,000 to $7,000 more. Again, it doesn't mean you have to use it all. You just always want to, my grandmother once told me, she said, Will, if you want to borrow $5, ask for 25. That's just a rule that I've always lived by. So understand, you found the vehicle for $33,000. Okay. You go back to your bank. You tell them, I found the vehicle, it's $33,000. The bank is going to ask you now for a purchase agreement. Purchase agreement. Once you get that purchase agreement, the dealership can either fax it to the bank or you can grab it from them, take it to the bank. The bank is then going to cut you a check for the $33,000. You take that $33,000 to the dealership, and then you go to the dealership and buy that vehicle cash. But because you told the dealership you were buying it cash, you may have been able to negotiate and save about another $1,000 off that vehicle. So now you're only paying $32,000, which means the payment is going to be even lower. So You asked for 35. They told you the out the door cost was 33. But because you came in with a check, which is like cash to them, they say you saved an additional $1,000 because typically when you buy a newer vehicle, brand new, there's less negotiation or wiggle room. But the used vehicles typically, I once bought a vehicle that I put on my, rental car line, and I was able to save as much as $6,000 just because I brought them a check. See, this is the power and why you want to have access to this information, because these are the things the dealership won't tell you. Usually the largest markup is on used vehicles. When it's a brand new vehicle, there's less margin. Now, sometimes they have rebates, but for a used vehicle, typically, it's a huge markup. So you bought the vehicle for $32,000. Now, let's say your terms on that vehicle is 60 months, which is 5 years. Okay. $33,000. You have a good interest rate. Now, just for the sake of making this math easy, let's just say your payment is $350 a month. Okay. Not saying that this is what the payment is. I'm just for the sake of this example. Okay. Now you have your first vehicle. You're going to go and set up your car rental business. Okay. You can put it on Turo for whatever, first of all, when you put in a vehicle on Turo, you want to do your homework and seeing what the average cost per day that someone can rent this vehicle from you for. Okay. So let's just say the average cost per day is $100 a day. Okay. On average, there's 30 days in a month. So if this vehicle was to rent every single day for the month, you would make, remember, your monthly payment is only $350. That's the power of this. And that's on a low end. Now, you may ask yourself, and I know the numbers are off, but I just want to give you some kind of basic round numbers. Now, let's just say, and you're asking yourself, well, Will, what if someone crashes the vehicle? What if, it's theft? What if they damage it? What if they scratch up the seats? All of those things. See, the beautiful part about Turo is that when you list a vehicle with them, they have an insurance that's already baked into the cost of what you are getting paid per day. And they have different levels. And so let's just say you have the premium insurance. And so what that usually means is they may take out a percentage of whatever your daily amount is. So let's just say the percentage is, and I'm just guesstimating, a 70-30 for the premium insurance. The premium insurance usually will cover you for, let's say your vehicle's in a shop due to a driver, having a small fender bender. They'll actually pay you for any recoupments or any lost time your vehicle is not on their website. Let's say, you have to get there's a wear and tear in the vehicle. There's a rip. Somebody punctures a hole in the back seat. It's covered, Now, let's say they bring your vehicle back just dirty. You can upcharge them for a detail. Let's say you require them to refill the gas tank after each use and they don't. Guess what? You can bill them for the gas that is going to cost you, because every single driver or renter has to put a credit or debit card on file. They verify that it's a legitimate person who has a driver's license. They do all the grunt work. See, the biggest thing or the best way to run a business is to have a system. See, Turo already has the system in place. All you have to do is plug in. And once you plug in, because you've put yourself in position to be able to go out there and get the cars, now you can become profitable immediately. So again, you bought a vehicle, no money down, no money out of pocket, brand new, off the lot, still got the fresh car scent. They put the dressing on the tires, all that good stuff. You got a good interest rate, a low payment. You putting the vehicle on Turo for $100 a day. Okay. Even if they only rented the vehicle, let's just say 5 times out the month, the whatever you make from Turo is at least servicing the debt. I want everybody to write that down. See, this is the thing about business. This is the thing about business that I want you to know. A lot of times people think in order to be successful in business, you got to spend 100 and make $1 million. First of all, that's not even believable. The biggest thing in business is if you can see at least a 7 to 10% return on your money, you're killing it. Think about it. Where can you go right now and get a 7% return on your money? Legally and ethically. Where can you go? Think about it. You put your money in the bank, it's 0.0008%. You know, the stock market, yeah, you may get a 5 to 12% return, but that's over a 10-year gap. We're talking today, you can put your vehicle on Turo, or you can leverage your credit today and go out and purchase a vehicle, purchase multiple vehicles, get your partners and you guys all chip in and purchase vehicles and start reaping a return, a ROI. These are terms we need to know. Getting an ROI on that vehicle immediately. All you need is a minimum 7 to 10% return. And so again, you want to get in the habit of knowing these terms. ROI, return on investment, debt servicing. So remember, your payment is $350 a month. Okay. Let's say the vehicle only rent 4 times a month. Okay. 4 times a month. That means somebody rented it 1 day per week, 4 times out the month. That's $1,400. Okay. Let's say after all of the insurance fees and everything out of Turo, just for the sake of math, you brought home $900. Okay. But remember, your payment is only $350 a month. Think about that. That's a profit. You're profitable. So imagine if you had 3 vehicles doing this. You know, somebody may say, well, Will, what if I want a luxury vehicle? Okay. So true story. I had a client who went out and purchased a luxury vehicle. His monthly payment was $1,000 a month. Now, somebody may say, well, why would I get a vehicle for $1,000 a month? Everybody has different levels. You know, you can go buy a $5,000 car or a $250,000 vehicle, all with no money out of pocket. The strategy doesn't change. But for this example, he bought a luxury vehicle. His payment was $1,000 a month. Think about it, $1,000 a month. He rents the vehicle for $1,500 a day. The vehicle rents, let's just say an average of 4 days out the month. That's $6,000. Now, I dropped out of college, but one thing I could do is add. And I know that $6,000 is way greater than $1,000. So he's able to service the debt every single month. Now, I'm not telling people to just frivolously go out there and purchase vehicles, but what I wanted to do was just show you a strategy to put you in position to start a business that now you can start receiving a residual income. Because remember, at the top of this, I told you, we're showing people how to do this from the comforts of their living room, all from the palm of their hands, their cell phone. We're on our cell phones every day anyway. We can show you how to protect the vehicle, how to start and unlock it, all those things right from the cell phone to where they pick up the vehicle. And as soon as they drop it back off, the money is deposited into your bank account within less than 24 hours. So imagine being able to start a business literally with no money down and being able to profit immediately, all from the comforts of your home. Now, you also heard me mention, well, Uber, Lyft, and all of those things. Check this out. When Uber and Lyft drivers rent vehicles, they rent by the week. So the average vehicle that they typically rent is like, let's just say a compact sedan. Okay. So a compact sedan, used may run you about $17,000, for something decent. Now, your monthly payment on a $17,000 vehicle, let's just say is, $250 a month. Again, and I'm just giving ballparks. I'm not saying that these are the actual numbers, but just giving you ballparks. Think about it. The average Uber or Lyft driver has to pay by the week when they go and rent from the major car rental places. But we remember, they took over 1 million vehicles off the road. So what happens is now they have to come to you to rent that vehicle. And now they're paying you, let's just say $200 a week. Okay. Usually they keep these vehicles long term because this is how they make their money. So if there's 4 weeks within that month, you've made $800 from a vehicle where the debt service is only $250. That's a profit. That's how you see your ROI. And all you have to do is duplicate this several times over. So hopefully you guys have learned something. Hopefully you guys see the benefit and why, this industry is booming because of the power of all leveraging your credit. But it all starts with understanding that you want to have great credit. And if you don't, no worry. Your credit can always be rebuilt. restored, repaired, all that good stuff. But more importantly, it's just about having the mindset and putting yourself in position. See, I talk about the 3 P's. You want to be in position to have the power to purchase. And once you're able to purchase, now you can go out there and get a return on your investment and then truly position yourself to become wealthy, because the only way you can become wealthy is by having passive income, meaning you're able to make money when you're not doing anything. And that's the power of positioning yourself to leverage your credit to start your own car rental business. So again, guys, hopefully you guys enjoyed this video. Make sure you click the link below, subscribe, comment, share, all that dope stuff. And again, my name is Will Roundtree, and I'll see you at the top.